afternoon and hello and welcome. Today, USBC, in partnership with JLM HR Consulting, presents today's webinar. And on behalf of our president, Ron Busby Sr., our board, our chambers, and our hardworking staff, I want to thank you all for registering and attending on today. I'm Philip Dunn, USBC Chamber and Business Engagement Manager with the U.S. Black Chambers, Inc. We are affectionately known as the global voice of Black businesses, and we represent over 170 Black chambers of commerce and small businesses across the United States, and we're founded on 6 pillars of service, and they are advocacy, access to capital, contracting, entrepreneurial training, chamber development, and information. Now, before I introduce today's agenda, I encourage you all to drop your questions into the chat, and we'll address as many of those as possible at the end of today's presentation. So make sure that you drop your first name, last name, as well as your business name and or chamber name in the chat as well, so that we can get you all accounted for today's presentation. Now, a couple things I'd like to do. Number one, I want to make sure that you all have capability to drop your information into the chat. Let me know if you don't. We'll work on getting that set up. And I think you do. I just want to make sure real quick. Give me 1 second. Yes, you do. I see Valerie's name there in the chat. All right, perfect. All right, and so drop those names, business names, chamber names, and any questions that you have in the Q&A prompt, and we'll get those addressed toward the end of today's webinar. Now, I'd like to introduce our very special guest speakers today from JLM. Jody Friend is a seasoned human executive with over 30 years of experience helping organizations build and refine their HR infrastructure. Now, her expertise lies in crafting practical and scalable solutions that are rooted in technology. She also works around compliance and people-centered strategies. Now, as the founder of JLM, she brings a passion for supporting early-stage ventures and nonprofit organizations and helps to guide them in establishing strong HR foundations that support long-term success. Now, her approach is both strategic and hands-on, so this makes her a trusted partner to clients navigating complex HR challenges. Now, before launching JLM, Jody held a series of corporate HR leadership roles across a variety of industries. This included manufacturing, information technology, telecommunications, and professional services. So many of the businesses that you operate, Jody is familiar with your industry. Now, she earned her Bachelor of Arts degree from the University of Maryland, Baltimore County in Catonsville, Maryland, and holds the SHRM Senior Certified Professional designation. Now, she's an active leader in the HR community and a proud member of the Society for Human Resource Management and the HR Alliance of DC. Now, her service to HR Alliance DC includes a 1-year term as president and 5 years on the board. So she writes the rules for HR. She continues to support the organization today as a member of its programs committee, and beyond her professional accomplishments, Jody is deeply committed to her family and her community. Now, she enjoys spending time with her husband and her 3 children, Lauren, Latia, and Jabari, as well as her grandson, Corey, and her granddaughter, Naomi. Now, she's also an avid reader and music lover. She's a dedicated mentor, and she takes great pride in guiding up incoming H&R professionals, sharing her knowledge and encouraging the next generation of leaders to embrace the dynamic and impactful world of HR. Arnold Hawkins, he serves as the VP of Client Services of JLM. He has over 20 years of experience in the field of EEOC, or equal employment opportunity, and has been an EEO investigator, counselor, and mediator. Now, he's managed numerous federal, state, local, government, and private industry projects, and Arnold has extensive project management experience applying applicable knowledge, skills, tools, and techniques to meet the demands of project activities and requirements with his many proven accomplishments. Now, Arnold has a Bachelor of Arts degree from the University of Rockford. Now, this is formerly known as Rockford College. It's in Rockford, Illinois, and he earned his JD from the University of Maryland School of Law, Baltimore, Maryland. And prior to earning his JD, he received a certificate of law from William and Mary in Exeter, in University of Exeter, Exeter, England. He has earned the following certifications: project management professional, EEO investigator, EEO counselor, diversity, equity, and inclusion, and SHRM senior certified professional. He's also received his training as a mediator from the Maryland Office of Administrative Hearings. Now, outside of his work hours, Arnold enjoys spending time with his family, pursuing his passion as a barbecue pit master, sports, and his ministerial calling as an ordained minister. And he's also an avid Cowboys fan. He wanted me to tell y'all that, so I want to make sure that we got that in there. So with that, I want to turn it over to Jody and our good friend Arnold to take us away. Jody, Arnold.
All right, all right. Good afternoon, everybody. It is so nice to be here. I don't know how Arnold feels about being called a Cowboy fan, but we're going to leave that one right there. All right. Well, thank you so much for hosting us this afternoon, Philip, and many thanks to the U.S. Black Chamber for inviting us to have this webinar with you all. And so, in our practice, we want to make sure that our clients, stay compliant and that they are familiar with things that could affect their business as well as their employees. And so we hope that you find this webinar very helpful today. So some of the things that we're going to cover today, next slide, please. We're going to about some federal legal and tax updates. We're going to talk specifically about some laws that are changing in Maryland, DC, and Virginia. We're also going to run through a checklist, a readiness checklist for 2026, and how all of these things are going to tie into HR and some of your operational planning. So, all right. So 2026 is, next slide, is going to be a very pivotal year. So there's some major tax law provisions that are going to be taking effect. There's going to be several state wage law changes. So, if you've got employees, some of those state wage laws may affect you. We're going to see increased compliance enforcement. So that's going to be really important to make sure you have all of your ducks in a row, your I's dotted and your T's crossed. It's also going to be a key moment for small businesses to reevaluate their structure, payroll, benefits. So what we want to do is try to help you prepare now to avoid any surprises later. All right, next slide, please. So we're going to start with the federal legal and tax changes. All right, next slide. All right. So first, some of you may have heard of the qualified business income deduction. That becomes permanent in 2026. So this can potentially be a tax advantageous for many LLCs and S corps and partnerships. So 2026 is a good time to review your organizational structure. So, speak with your attorney, speak with your accountant, someone that can help you to make sure that you have the best structure for your business so that you can maximize the benefits of that particular qualified business income law. So second, there is also going to be 100% bonus depreciation. That's going to be restored. So allowing for the first time, for the first full year of expensing your qualifying purchases, right? So this is significant if your business has to buy some equipment, maybe make a major investment in technology, or maybe even vehicle investments. So, we work with clients in a variety of industries. One of our clients is construction, and they buy a bunch of vehicles. So this is something that, perhaps they would want to take advantage of. So, again, if you are looking to, again, purchase equipment, technology, or, make vehicle investments, this might be a good opportunity for you to take advantage of the bonus depreciation. Then there is Section 179. The limits are going to be increasing, giving small businesses more flexibility in how they expense capital purchases. So again, I would encourage you all to make sure that you're having these conversations with your accountant to help you maximize and take advantage of some of these things if they are applicable to your business. There's something else that if you are an employer who is providing childcare for your employees, there's a child care credit that's going to be increasing up to $600,000, which is offering meaningful incentives for providing child care support. So, again, if that's something that is applicable to your business, definitely take a look at that. And then effective on January the 17th, 2026, the SBA has some changes that they're implementing as well. So these changes are going to impact federal contractors under the 8A program, the Women-Owned Small Business Program, and the EWSOB program as well, and HubZone. So if you have these types of certifications, what you want to do is make sure that you become familiar with the changes that are going to take place, come January 17th. All right, so what we're going to do now is shift to the state changes, and I'm going to let my colleague Arnold take over from here.
Good afternoon, everybody. One of the things that I wanted to make sure you understood was that Phil was actually practicing his stand-up comedy by calling me a Dallas Cowboy fan. Just wanted you to know that. But in the meantime, let's move forward with talking about state changes. It's very important to remember that what we are giving you today should trigger you to think about what you need to do to get the year 2026 started off in the best way possible to give your business the best advantage possible getting started in 2026. So we're going to start with, there's many state laws out there that are changing. We're just going to give you a synopsis of a few of them. And but you should speak to your advisors to make sure that you're in compliance or taking advantage of those changes that are going to be happening that impact where you are located. So we're going to look at Maryland first. If we can go to the next slide. Now in Maryland, there is a new 3% sales tax that applies to certain data and IT services. And pass-through entity tax rules are adjusting again. So you need to know as business owners that you should confirm the most tax efficient approach to you. So, again, the 3% sales tax increase on data and IT services, and also the pass-through for entities like yourselves. And you want to make sure that you get advice about that. Then there is the Procurement Reform Act, which expands state contracting access for small businesses. And you really want to make sure that you take advantage of that. And as a small business, if you are a small business, be able to get the best advantage you can to take advantage under the Procurement Reform Act. And then you've got the minimum wage, which will now adjust annually based on the CPI, and you want to make sure how that impacts your business. And what it means is that it's predictable at this point and not a variable change going forward. And that was always an issue in the past. So now you have a more predictable process for understanding what that increase will be. So that is very important. You want to make sure that you focus on what impacts your payroll and budgeting the most. So let's look at Virginia next. Now, in Virginia, the minimum wage increases to $12.77 on January 1st, 2026. The tax law changes go into effect and may influence filing requirements. So you want to make sure that you speak to your financial advisors about that. Several legislative adjustments impact business licensing and employment compliance. So again, your financial advisors, your HR advisors, you should be getting with them to make sure that you are taking advantage of whatever those impacts are. And it's also a good time for Virginia business owners to review contracts and payroll systems for 2026 alignment. It's very important if you're in Virginia. You want to make sure that you're in alignment with what those changes are going to be in Virginia. And now let's look at DC. So in DC, the tipped minimum wage phase out continues. So restaurants and hospitality businesses will see ongoing changes. So what you need to understand is that eventually there was supposed to be a phase out of the tip minimum wage, but that's not going to happen anymore. Now what's going to happen is there's going to be left in place, but it's going to grow at a slower pace. And the tip minimum wage will never grow to be equal to what the minimum wage is. At best, it'll get up to 75% of what the actual minimum wage is. And that will grow more slowly. So it'll be every 2 years, there's going to be an increase in the tip minimum wage, but only up to about 75%. It'll never, right now it's at 60%, but it will never grow past 75% of what the tip minimum wage is. And then if we look at what's happening in the paid family leave, the benefit increases to $1,190 per week under the Paid Family Leave Act. So you want to make sure you are familiar with that. And then DC maintains strict limits on non-compete agreements. So you as an employer, you must avoid using them unless you're exempt. There's this thing where you have a non-compete agreement so that if someone leaves your establishment, they can't compete for the same business. Well, those are not being held up in court anymore like they used to. So you want to review the ones that you have. You want to check to see if you're exempt. If you're not, you're probably not going to be able to enforce that provision anymore. So this is a good time to review your leave policies, your postings, and your handbooks for that matter for before 2026 to see if there's any adjustments that you need to make. And talk to your professionals, your HR professionals, your financial advisors, so that you'll be familiar with that. We are going to now flip over to talking about retirement, and I'm going to leave that to my esteemed colleague.
All right. So before we into that, I just want to reiterate what Arnold has already shared in terms of, making sure that you are connecting, if you can at all, connect with your advisors, before the end of this year so that you're prepared for 2026. And so, as business owners, it's really, really important that we, have access to an accountant, a CPA, a tax advisor. Very, very important that as business owners, we have access to legal counsel. So those things are really, really important. And, while Arnold and I and my team as HR consultants, you know, we're very knowledgeable about a lot of things because we're also business owners. But it's also important that you know you get the subject matter experts in those particular areas. Don't have general counsel, think about adding that to your list of things to prepare for in 2026. So again, that you can get the best advice possible so that you stay in business. It is so important to keep that in mind as well. And so for those of you that are in business and may have employees, benefits are so important. So if you're at the stage where you're able to offer certain benefits, such as a 401k plan, a retirement plan. You know, 401k, typically you find those in nonprofit, in the nonprofit arena. But it's very important that you understand all of the nuances that come with putting those benefits in place. And so, you know, the deferral increases, they typically will increase generally, you know, between $500 and $1,000 each year. Generally, there is an increase as to how much the employee can defer for their retirement each year. And so, as you can see, the income going up in 2026 from 23. And then if you are of a certain age, we have something that's called the catch-up contribution. And so if you're age 50 or more, your catch-up contribution has increased from $7,000 to $8,000. And this is, you know, again, if you were a late bloomer, so to speak, you didn't start saving for your retirement until later in life, you have the opportunity to make up, you know, to what they call catch-up contributions to your retirement plan. As an employer, it's also important for you to understand, you know, what your contribution may or may not be to these retirement plans as well. So there's all kinds of ways that you can set these plans up. There's different options for you. We just have highlighted a few here that are the most common, but there are other types of retirement plans, especially for those that may be solopreneurs right now. You may be the only one in your company. You know, the SEP IRA might be helpful to you, and it looks like we've got some folks in the on the webinar today that are experts in their field. I see some of the chats going up. So again, just keeping in mind that these are good things that the retirement contribution limits have increased. Now, if you are between the ages of 60 and 63, there's a little nuance around the catch up. You can actually do contribute more. So again, if you're a late starter, you can certainly do a little bit more as far as catch up goes. You can contribute an additional $11,250. And so again, these are great things if you're able to have benefits in place, but certainly, you know, those of you that don't, you're going to catch up. You'll be able to do this as your business continues to grow. Now, another note that we want to point out that beginning in 2026, and this is really important, and we've already started sending these notifications out to the clients that we support and to their staff. Anybody that is earning more than $145,000 annually must make their catch-up contributions as a Roth. A Roth is actually an after-tax contribution. Generally, you know, your 401k plans and your 403b plans and your 457b plans are pre-tax contributions. So the monies will come out of your paychecks on a pre-tax basis and goes into your retirement plan. But if you are earning more than $145,000 and you want to make those catch-up contributions, you have to do those contributions as a Roth. And of course, like anything, there's pros and cons and there's benefits to all of that. So again, I see in the chat there are a number of experts here on the webinar today, so make sure you all connect and do some networking so that you can get the best advice possible. Next slide, please. All right, so again, some other important updates. Again, if you're doing IRAs, individual retirement arrangement, your contribution, you can now contribute to an IRA. It used to be $5,000. Now you can contribute up to $7,500. So that's, again, that could be a tax savings for you as a business owner. So again, talk to your tax accountant or, again, your financial advisor about how to maximize and take advantage of some of these opportunities. And then, of course, if you are age 50 or more, you can do a catch-up contribution to your individual retirement arrangement of an additional $1,100. So again, you may not have employees yet, but as a business owner, these are tax vehicles that you can take advantage of and, put that money aside for your future retirement. Next slide, please. All right. So another important update from a benefits perspective are the health savings accounts. So the we like to call them HSAs, right? So the HSA contribution limit for 2026 is $4,400 for individual coverage, $8,750 for family coverage. Again, this is another vehicle where you can contribute pre-tax dollars. Now, the catch here, of course, is that you have to be participating in a high deductible health plan in order to take advantage of a health savings account. So that's really, really important. So if you don't have, there may be some benefit brokers on this call. Again, connect with them, see how you might be able to take advantage of some of these tax saving vehicles. HSA accounts are very popular now. They've been around for a while. And again, they offer, a lot of opportunities for you to put aside money. We're also going to talk a little bit about something called flexible spending accounts, but they operate differently. They're similar, but they operate differently. The HSA, the nice thing about HSAs, health savings accounts, is that you own these accounts, right? You can put money aside as long as you are participating in a high deductible health plan. And here on bullet number 2, you see the amounts there. And so if you don't spend this money in, say, a particular year, you continue to have that money available to you to spend in future years. And so it works slightly different than the flexible spending accounts. So again, these are great tax saving vehicles that you can utilize not only for yourself, but if you have employees, it may be something that you want to consider implementing in your organization. And yes, I do see a quick question in the chat there that it does roll over. So yes, you can roll that money over from year to year if you're not spending it. Okay, so if you are a company that is offering a health savings account, make sure that you update your communication and all of your plan documentations to reflect the new limits for 2026. And employees, again, should be informed that these higher limits mean more tax advantage savings opportunities. So, again, we want you to be aware of these things and hopefully be able to take advantage of them.
Yeah, and Jody, if I could just share an example.
Yes.
We have a client that has they provide health insurance for their employees, and unfortunately, they had to raise the deductible for that particular program the health benefit that they were providing. So that meant that the out-of-pocket deductible for an employee only coverage was like $4,000. So what happened was the employer decided to create an HSA for the employees to cover that up to $3,000 of that deductible. So they would only be out of pocket $1,000, but $3,000 was covered by the employer, set aside for the HSA. And the good thing about it was, practically speaking, what happened was they ended up getting, the employees got a debit card, sort of credit card for that for those $3,000, so that they could have access to those funds immediately when they had to go provide for go to the hospital or go get a doctor's appointment, and there was a deductible that had to be covered by that particular patient or employee. So there is the great advantage of those HSAs. It's a great benefit for the employees if it's affordable by the employer. So I just wanted to point that out, that there's a good use for this HSA account.
Yeah, absolutely. Thank you for that, Arnold. And that's a very good point. And so, and the extra point that I want to make is that not only can the employer make a contribution towards the employee's HSA, the employees can also make contributions, again, up to the limits. You can't exceed the limits, but you can, both employer and employees can make contributions to the HSA. So, so again, it can be a win-win. Again, if you're offering benefits to your employees, if you have employees, there again are some tax advantages to being able to do that as well, and some business write-offs that you can do. All right, next slide. All right, so we mentioned the flexible spending accounts, somewhat similar to HSAs, but they do operate differently. So the flexible spending accounts, there are two components that you can offer. You can offer what we call the healthcare FSA. So those contributions have risen to $3,400 for 2026. And again, these are pre-tax contributions. So you're reducing your taxable income by being able to take advantage of these types of programs. Your employees are reducing their taxable income as well. So what's the advantage to you as a business owner if you're able to offer this type of a benefit? Because the employee's taxable benefit is being reduced, your payroll tax is also being reduced. So it's a win-win. It's a win for the employee. It's a win for the business owner as well. So the second component to this is what we call the dependent care FSA. So that limit has increased from $5,000 to now $7,500 going into 2026. That's huge because it was at $5,000 for, I mean, as long as I can remember, the dependent care FSA has been $5,000. And so that's really, it's really nice to be able to see that. You know, I'm sure there are folks maybe on this call, maybe people that you know that spend way more than that in childcare. But again, to be able to take advantage of some tax savings, to be able to pay for those childcare expenses is great. So there is a carryover provision, but you have to allow that in your plan. So if you're thinking about offering this to your employees, or you know, maybe you can, you know, if you're offering it now, but you don't have the rollover provision, the next time it's time to renew, you can ask your benefit broker to work with you to allow the plan to roll some of those monies over if they're not utilized or spent in current plan year in which you're offering it. So that carryover amount has also increased. I believe it was $500 and now it's increased to $680. So so there again, it's good to see that these amounts are increasing. after so many years that they were not, they would remain flat. There's adoption assistance. Okay. It is now $17,670. So again, that's great that there's an increase in that provision of the FSA program. There's commuter benefits that assist employees with their parking and transit expenses. Again, these are all pre-tax benefits that you can take advantage of, your employees can take advantage of. So that's $340 a month that employees, again, can put aside for their transportation expenses. That's things like, parking at a parking facility, taking the metro, taking maybe the train to work, however that may work for your employees who may be commuting. But again, if you are offering these benefits, make sure that your plan documents are up to date and that you've communicated these changes to your employees during the open enrollment. And then, of course, making sure that the payroll deductions and the benefit elections, all these changes are reflected in your systems. And what we find, we work with a lot of benefit broker as our partners to make sure that we're providing the clients that we work with, the best possible benefits. We make sure that we work with them to make sure all of these things have been updated and they're in compliance. So if you're not getting that type of service from your benefit broker, again, network with each other on this call, because again, I know there's some subject matter experts, and make sure that you're getting, the service that you need. The insurance brokers are actually paid by the insurance carriers. So, again, maximize the benefit that they can bring to your organization in advising you on how to design your benefit programs. Next slide. All right, so Arnold, I'll let you take it from here. You're on mute, Arnold. Got to get you off mute.
All right. Action steps. So what do we need to do now? So we've already been talking about being ready for 2026. So why don't we just kind of review what you should be focusing on at this point? So we'll just move on to the next slide. The 2026 readiness checklist. It's very important that you get with your financial advisors and review your business structure to see how you can maximize the opportunity under the qualified business income deduction. You want to work with HR to audit your policies for wage and leave and benefit updates. Make sure that your HR policies are up to date and on point based on the changes in the law. You want to assess payroll impact of state minimum wage changes. And you have to work with your advisors within the location, the jurisdictions that you work in. You may be in one jurisdiction, say Virginia, or you may just be in California, or you just may be in New York. But if you are operating remotely across you have employees in different jurisdictions, you have to make sure that you are in compliance with those different jurisdictions. So that's very, very important. And you want to revisit capital spending and Section 179 deductions and bonus depreciations, and Jody's already gone over those things, but you want to make sure you get with your advisors to make sure that you're in alignment with how they may impact your business. And you definitely want to schedule a 2026 compliance review, again, with your tax advisors and your HR advisors. These are very important steps. And that way that, once you go through that process, you'll be able to move forward in coming up in 2026 confidently that you are in the best position to maximize your opportunities to be a successful business in 2026. And with that, we'll move on to the next slide and we will open up the floor for Q&A. Let's look at the questions here.
All
Let's see.
right. All right. Thanks, Arnold and Jody, for sharing that very timely and insightful information to get all of our businesses ready for 2026. There are a couple of questions that have come through the Q&A. The first question, we did talk about updates to Maryland, Virginia, and DC. But do these changes typically apply to, say, states like California and, say, New York as well?
Jody?
So it's possible. It's possible that there are very specific changes applicable state by state. And so one of the things that we did mention Virginia's minimum wage is increasing. So if you have hourly based employees in the state of Virginia, definitely if you have to be paying at least the minimum wage. And so, a quick Google search can also provide that with you, but I believe it's $12.77 an hour. And so the other thing that's really, really important to know is that if you have employees working in a particular state or you're operating in a particular state, if your state law is more generous than a federal law that you may be required to be in compliance with, the state law is the one that's going to take precedence. So that's why it's so important that you be aware of what is happening within your state where you work, where your employees work, right? So since COVID, what we saw was this huge migration. So, we were all kind of, trapped in our homes. And so what we heard from many of the clients that we worked with was that they had employees who were now moving to other states to be with family, so on and so forth. And so that opened up just a whole wide variety of compliance that these employers who may have only had employees in Maryland, if they were based in Maryland, now they've got employees, let's just say in, Connecticut or New York or, Florida. And so now as an organization, you have to look at take a more global view of what laws might be applicable to you. And so as a solopreneur, generally, you don't have to worry too much about specific employment laws. It's when you begin to have employees, right? So as a solopreneur, some of the things that you might want to be concerned with, again, is your entity structure. Is that the most important structure for you as a entrepreneur? Do you have certain insurances? Do you have licenses that may be required to operate and do the things that you do, in your business? So again, a lot of things are maybe industry specific. So, and it's just so much, it's really hard to cover everything, in a webinar like this. And so we really just wanted to kind of do the highlights and just give you a quick overview of some of the changes that are coming down. But again, it's important that you have your subject matter experts that you can call on. So we talked about having an accountant and or a CPA, someone that can give you advice on, taxes and how to maximize, things that may be available to you under these new laws. We also advise you to have general counsel, someone that you can talk to about, legal matters and provide you with that guidance. Having an HR consultant on call doesn't mean you have to necessarily hire someone as a full-time HR employee, but maybe having an HR consultant on call that you can talk to or just run something by regarding state law. Is this applicable to me? or even federal law. Is this federal law applicable to me? I'm only of a certain size, so it may or may not be applicable to you. But having your subject matter experts, as part of your business advisory, right, is something that we strongly recommend. And so we are not, I'm looking at Birth by Queens admin. No, we can't really talk about employing your children in your business. I would encourage you to speak to your tax advisor about how to set that up. It can be done. That's not my lane. Arnold, I don't know if that's your lane. But again, I would encourage you to speak to your tax advisor about how to set that up properly, right? Monet, all right. Do we have referrals for this in each state? So referrals okay, here's the thing. Thank you for clarifying your question, Monet, and going into a little bit more detail. So your accountant, your general counsel technically could be anywhere. So let's just take your accountant. If your accountant is familiar with different laws around, taxes and things like that, generally, I think with taxes and accounting, they're going to be driven a little bit more by state law. There may be federal law, like the IRS, but there could potentially be specific state laws around, again, filings that you may need to make to the state, right? And so if you have employees, certain things are going to be important to make sure that you have your unemployment account set up in those states where you have employees that are performing work for you, making sure that you have your your state tax account set up as well. So you don't necessarily have to have these specific subject matter experts in a specific state. As long as they are aware of where you're doing business, they can potentially help you. So again, to give you an example, Arnold and I support clients across the US. And so that requires us to be able to be knowledgeable of very specific state laws of where they're doing the work. Now, do we have all these things memorized? Absolutely not. It's just too much to have to memorize all the different laws for each state, each county. Sometimes it's drilled down to the county and even the city level. So, but as HR, consultants, it's our duty to make sure that we're getting the information, researching the information, finding the information, and providing that to the clients that we support. So, it really just depends. Let's see what else. We got some more questions here.
Yeah, and this next question comes to us from Terrence Brewer, and
Okay.
in particular when it comes to healthcare brokers. Is there anything specific that they should ask their healthcare broker that wasn't outlined in our slides today to ensure that they're knowledgeable going into 2026?
Yes. So what I would recommend there, Terrence, is that if you are working with a healthcare broker, have a phone call with them saying, hey, what do I need to know based on the benefits that I am currently offering? If you're offering benefits to your employees, what is it that I need to know? What are the things that are advantageous to my business? When we partner with benefit brokers, we want to make sure that they understand how our business operates and what's going to give us the best advantages. What are the best benefits that we can offer, that we can afford to provide to our employees? So just ask those questions. Don't be shy about asking the questions to your benefits broker. Again, I don't know what you may or may not be offering at this time, but make sure that, again, that you have all of your summary plan documents that are ready for your current benefit plan year. So a benefit plan year doesn't have to be on a calendar year. again, we're doing open enrollment meetings in collaboration and partnership with the benefit brokers for our clients year round, because not everybody is on a calendar year. So we have some employees that renew, some clients that their benefits renew in October, some in November, December. I mean, literally year round. April, July, August. And so it's really specific around the plan year for your benefits, just making sure that what's applicable for that particular year. So for instance, we have a client that their benefits renew in August of every year. They cannot take advantage right now of, let's say, the increased limits on the FSA and the HSA. They can't take advantage of those right now. They can only take advantage of those higher limits when their plan renews next year, August. Then they can implement the increased limits on those plans.
And then, thank you for that, Jody. Then we have another question from Natalie Miller. What specific questions would we ask an HR consultant? Now, you mentioned state and federal laws and or updates. Is there anything specific we need to know to stay compliant?
So, yes, so great question. Arnold, I don't know if you want to, I've been talking, Arnold, I don't know if you want to address that, but.
Well, so yeah, I can, what I would suggest if, in terms of HR, is you talk to your HR professional about doing an audit, so that they can tell you where you are in terms of compliance and what you need to do to be more compliant in the HR. They'll look at your handbook, for example, and make suggestions with respect to that. They'll look at your how you're set up your personnel files, for example, and making sure that they're set up properly. So just the best thing to do is to ask for an audit, and they'll give you a detailed analysis as to what you need to do to be more compliant in the areas of HR.
Yeah, and that usually, kind of identifies any gaps that you might have or any weaknesses.
Absolutely.
It helps to identify any new employees that have been added or even employees that have maybe offboarded from the company and you need to update your record. So it's definitely a good point there.
Yeah.
It'll also tell you whether or not you need to think twice about whether you have too many 1099s as opposed to employees.
Yes, very important. And the compliance component of that we talked about earlier, there's going to be increased scrutiny. And guess who they're targeting? Small business owners, right? So that's why it's so important, again, that you have your subject matter experts, in your circle of influence that you can call and get advice and counsel about, all kinds of things, whether it's HR, whether it's legal, whether it's, accounting, because, that issue around, classifying someone as a 1099 contractor versus a W-2, which is someone that you're paying through payroll. And yes, you can pay your contractors through a payroll system, but the classification is where the compliance comes in. You have to make sure that if someone is truly classified as if you're saying that they're a 1099 contractor, you want to make sure that they're truly going to meet the IRS tests to be classified as a 1099 contractor. So many small businesses run into sometimes issues with the misclassification. And so we thought we were going to have an opportunity to work with a client a couple of years ago because they were reading more and more about the misclassification of 1099s and versus W-2s. And before we could actually get under contract with them to do an assessment and an audit of their classifications for these folks, the Department of Labor fined them because the Department of Labor said they were misclassified. And Department of Labor wants their money. Okay, so if you misclassify, your employees, in the wrong way. If you say, this person's a 1099, what's happening is you're not paying payroll taxes.
Right.
And so if that person is, you basically are saying, okay, well, I need you to come to work from 9 to 5. I need you to show up at the office. Here's a computer that I need you to work from. Here are the rules. Here's the this, here's the that. Are they a 1099 or are they a W-2? Are they really your employee, right? So the IRS also has a checklist that you can take a look at. And by the way, Phil, I can actually send you, and you can provide this as a resource to the folks on the webinar today, because I did this for another webinar. The whole webinar was around classification, 1099s versus W-2, and I have a nice little booklet that will answer. It's like a Q&A booklet, and I'll send that over to Phil, and he can share that with you all. And I think that will help you in that regard, but that's important too. So it's going to be a lot more scrutiny on small businesses. So we really want you to be in compliance.
Right. And another really big classification issue for employers is the classification of exempt as opposed to non-exempt. If you're exempt, you're not going to be being paid. The employee will not get paid overtime. If you're non-exempt, that employee is entitled to overtime. So you have to make sure that you go through the proper assessment of that employee's responsibilities to make sure that they're properly classified, and the Department of Labor will get you on that as well if you misclassify exempt versus non-exempt employees. Very important.
And are these fines pretty material? Are they pretty significant, or are we just talking like maybe a one fine per employee? Talk to us about that. The
Well,
penalties.
they can be pretty significant, Phil. And so the misclassification of an exempt versus a non-exempt employee, maybe you classified that person as exempt and you're paying them a salary, but really they didn't pass the duties test to be
Mhm.
classified as exempt. They really should have been paid on an hourly basis. And all it takes really is for an irate employee, right? Employees nowadays have access to, Google, ChatGPT, and all kinds of GPTs, right? So chats and, the AI, and they can find out this information. So don't, be, surprised if, you might get a call from the Department of Labor because an employee has maybe filed a wage and hour claim against your organization, and because they felt like they were misclassified. So what will happen is the Department of Labor will do, they'll audit you. They're going to ask for back records, back payroll records. And here's where the significant fines can come in, is if that person was improperly classified as, say, exempt, but they really should have been non-exempt and were eligible for overtime, they can go back several years and say, hey, you got to make that up. And so that can be significant cost to your company, and really could jeopardize the viability of your company, and especially if there is more than one that you've misclassified, more than one employee. So we just want you to be, again, really careful on that. And again, as if you're going to engage an HR consultant, these are the types of things that may come about during the audit, or again, just through a consultation. If you are, maybe you've developed a job description, but you're not quite sure what the classification should be. That's where an HR, consultant or professional can help guide you to make sure that you've classified them properly.
Perfect, perfect. And then the last question for you both. We know that you mentioned Chat GPT and AI. We have a lot of small businesses that are leveraging artificial intelligence for marketing, for other things. Should they rely on AI for HR consulting, or should they call one of you guys?
So here's the thing. I think that AI is a very useful tool. It can make things more efficient. Uh, when it comes to things like taxes, legal issues, HR and compliance, use that as a starting point, but verify
Mhm.
because AI may not be up to date depending on which AI tool you may be using. So you want to make sure that that information that you're getting from AI is accurate and that it's verified. And so it'll cost you less, right? You may do your initial research on using AI or Chat GPT or something like that, but then take the necessary steps to really get that information verified. The other thing that I just want to caution you about, and I know we're right at time, is that you know it's one thing to understand the law, it's another thing to how do you apply the law. And that's
Mhm.
where professionals like myself and Arnold can really provide guidance to you, or hopefully any HR consultant or professional that you hire or engage with can really help you understand how to apply the law. So
And
that's
and
the
it-
important part.
and I just want to add, chat will only answer the question you ask it.
That's
You,
true
you
too.
you have to make sure that whatever question you ask it, it's the question you want answered. Because if you don't ask the question that you really want answered, it's chat's only going to respond to what you ask it. So and so you're gonna might be relying on misinformation. So again, as Jody's already mentioned, you want to go to your professionals to double check to make sure that the information that you have is reliable.
All right.
All right.
There you have it, folks. I want to thank JLM, both Jody and Arnold. Arnold, my apologies about the Dallas Cowboys. I learned early on you don't play with HR. But I want to thank JLM for providing their timely services and information and consultation to us today. And that concludes our webinar for today. But in the meantime, we do have some additional information we want to share with you all. And very first thing we want to do is Tiffany and I, my colleague, has been working real hard behind the scenes, trying to make sure that we get a lot of information out to our small businesses. So today we encourage you all to register for the small Verizon Small Business Digital Ready platform. You get a chance to take advantage of some very awesome resources and tools. And two of the most helpful that we've seen are some free courses that you get a chance to take and experience. And this helps you to continue your interest in HR and in operations. So here are two courses that you can actually scan the QR code for and get prepared and take some of these courses to help you better understand human resources and, of course, operations and operation efficiency. So definitely take a look at those. We also encourage you to join us for some of our upcoming webinars. We do have a number of webinars that we're planning for the rest of December, but then in 2026, we'll be publishing a whole suite of live webinars and training for our small businesses and chamber leaders. So definitely use this QR code that you see here on the screen and take advantage of these opportunities when you can. All right, next up, our crown jewel. This is the Buy Black platform. And of course, our mission at USBC is to create what we feel are meaningful economic opportunities for Black owned businesses and small businesses in general in our community. So we encourage you all to list your business on the Buy Black platform. And then once you've done that, pursue certification certifying your business as a Black-owned business. If you're 51% or more owned by a Black-owned business, we encourage you to participate in this very, very valuable resource. All right, a couple more things I wanted to share with you all. We do have a partnership with SCORE, and we recognize that there are often times where your business needs assistance. And so we partner with SCORE to get answers to those questions that you typically have and you want to get answers to. And what we found is that research tells us that small business owners who receive at least 3 or more hours of mentoring report higher revenues. So just those 3 hours could help increase your revenues and growth. So this mentoring service is free. You get a chance to meet one-on-one, either virtually or in person, with a mentor, and they're going to offer you experienced advice, consulting on best practices, and education on various small business topics. So scan this QR code and also take a look at our post-webinar email in order to register. All right, this next one is our resource desk, and I'm hoping to invite Jody and Arnold in 2026 to one of our office hours sessions that we have, and you get a chance to ask your questions, your specific questions that you might have, and either get answers or action items for your questions. So definitely be on the lookout for the weekly email that comes out offering you an opportunity to come to the resource desk office hours every Friday at 11 a.m. Eastern Standard Time. And then lastly, we encourage you all to follow us on social media at usblackchambers.org. And if this forum prompted any questions beyond what we answered today, please send an email to programs@usblackchambers. And so with that, I want to thank our very special guests, Jody and Arnold. I want to thank all of you. And on behalf of our president, Ron Busby Sr., our board, and our staff, I want to wish you all a happy holiday season and thank you all for attending. Thank you.